Hello money magnets and master traders. Today was a very underwhelming day. Barcoding, aka the chop phase where the price just chopped sideways. It's kind of sad, especially with the intraday price action you guys can see on the 15-minute chart. Multiple times it tested my 642.5 level as a support. Multiple times it bounced and went nowhere. I had a level at 644, that's a macro level, fib level, and never even at least tested it as a resistance. As you guys can see, we go back up to the daily chart and we can see how tiny this candle is. The previous candle were choppy, but today's candle was even smaller. Bad news, SPY's barcoding. But I do have some good news. The good news is that after the chop phase, after SPY's done barcoding, comes the trend phase, and we must prepare for that trend phase. In order to do that, we need to identify the chop range, and we can see multiple times right around that 646 level, and multiple times right around that 642.5 level. We have more evidence. I think I mentioned in previous video already that this was the chop phase, the chop range, but now we have more evidence. And when I see something like this, I do get a little bit excited. I do get hopeful, because when the chop phase ends and the trend phase returns, it's going to be a very beautiful thing. And identifying the chop range makes it clear to us where the area of liquidity is in case we get trapped, and what the SPY needs to do, what level the SPY needs to break in order to show us what the next trend move is. Because we're gonna simplify this. 642.5 to 646 is the chop range. That means as long as we are in between that range, I'll have to say it, SPY is not really worth trading. You can do some scalp move, maybe some level to level move, because in this chop range I do have 644 as a level to watch. If we clear 644, we can go test 646. But unless we break that range, this channel, the next trend phase is not here yet. So 642.5, 6 to 646. Watch the break of that range, guys. Maybe we have FOMC minutes later this week. I don't know what the catalyst is going to be, but whatever it is, whatever the excuse the market makers are going to use, we know what it needs to look like on the chart, and that's breaking down or breaking out from this channel. So it's more clear than ever what the chop range is. And I know the chop range is not fun to trade. It sucks, but at the very least, we know the levels, we know the setups, and when it comes time, we are going to trade it unbiasedly, whether it's to the upside or to the downside, because it's the money magnetic thing to do. QQQ has been pulling back, actually flagging out, while SPY is chopping sideways. QQQ has been pulling back, technically speaking, and the breakout level would be to recapture 578 and 580. This consolidation phase, because remember, when we're in the chop phase, it doesn't just come sideways, it doesn't just come in the form of channels, it can come in the form of triangles and flags. In this case, it looked like it's flagging out, and those levels 578 and 580, if they clear, that's breakout mode, and there's a good chance the chop phase ends for QQQ and we are entering the bullish trend phase, sending us back up to 583.5 and 586. But today, multiple times right around that 575-ish area it held last week, and this today as well. But I do have a fib level at 574.6. if we are continuing to be bearish and it's continuing to be pullback time for QQQ, those levels must fail. Hopefully we get some volatility, but 574.6 and 573 must fail to send us lower down to 571, 569.7, and we technically still have a gap around the 567-ish area. Here is NVDA. It technically showed some bullish follow through. The intraday price action was very terrible, but look at the context. Last Friday we bounced off of this multi-week trend line, and then today we have a higher close. So bullish follow through for tomorrow is to bounce off of this trend line by clearing 182 and 184. If that happens, I will not be surprised if we go to new all-time highs. But if we are to be bearish, we need to break down 180. Not only will 180 break down the chop range, but it will break down this multi-week trend line, and it should give us a beautiful move, $10-15 move to the downside. Hopefully breaking it down can cause some fear and bring back some volatility. Here is Tesla. Now Tesla has an inside candle setup, so we're gonna simplify this as best we could. 339.3 is the top of the mother candle's high, and 327 is the low. So because of this setup, anything within that range, 327 to 339.3, we can round it up to 340 actually, because that's one of my resistant levels. So 327 to 340 is chop range. If we are to get the next trend move, we need to break that chop range. So for me, above 340 is when I would long. I believe we could go hit 347 to the 350 zone and possibly higher this time. But if we break down 331 221.5 and at 327 low from last Friday's candle, I would be bear bias and favor another $10 to $20 move back to the downside. Here is IWM also with its own inside candle setup, with the chop range being 226 to 228.7. Anything in between that is noise, guys. But if we can get above 228.7 and clear that fib level at 230, I would definitely be bullish and favor another $5 to $10 pop to the upside. But if we take out the low at 226, that is bearish. That is bear bias behavior, with 221.5 and 220 back in play to the downside. Here is coin. Look like it's trying to get up that breakout. It hit one of my fib extension levels, my 1.236 fib extension level around 307.8, and it found some buying pressure. Today's high was around 324.29. I like to see that high get taken out tomorrow, as well as 328 and the 334 level. I'm still watching those levels because it's looking like a potential breakout, but if those levels recapture, I would definitely trust it more. Otherwise, if we break back below, I did have this 317 level, break back below 317, it should send us back down to the 312, 310.5, 309 and 307.8 level, and below 307.8 I would be bear bias once again on coin. And last but certainly not least, here is HTZ, something a little different. This is a $5 ticker symbol, a little over 5.22. It closed today, looking like an interesting setup here because it recently took out a pivot low. This was back on August 8th, and it led to some nice downside hitting the 1.236 fib level, which is around the $5.08 area. Look like there's some buying pressure. Now for me to trust the bounce, I do have some resistant level. I'm looking at this low from August 6th, that's 5.47, and also the fib level at 5.72. I tell you guys, I'm watching this, and if those levels recapture, I'll probably get maybe about 1,000 shares. Okay, you don't have to copy me, but if those levels recapture, I'll probably grab some shares, and I would have targets to the upside. I have 6.30, 6.76, 7.40, 7.80 and 8.44. Those will be my targets to the upside. But if it don't recapture those levels, Unco will do nothing. And if it breaks down $5.08, Unco will do nothing because that's pretty bearish. But I will play the long side, 5.47 and 5.72 recapture, probably pick up some shares. And that's what I have for you guys today. I know the market was not really nice to us. It wasn't nice to the bulls, it wasn't nice to the bears. State of decay on the contracts, I know it sucks, but the best part about this is that it's not gonna happen forever, and eventually that beautiful volatile day that we all love and want is going to come back. It's always nice when it comes back. You just gotta be patient and continue to believe that we are money magnets. Love y'all. Peace.